I'm speaking. Can y'all hear me? Yo. I'm speaking. Can y'all hear me? Yellow. No, let me check my mic. Mic is good. Desktop is good. Yo. Hello. Can y'all hear me? Better? Can y'all hear me better now? Yellow. No, let me check my mic. Mic is good. Desktop is good. Yo. Hello. What's good, guys? Better? You guys can hear me. Can y'all hear me better now? I have the volume all the way up. Let me check my mic. Mic is good. Desktop is good. Yo. A little bit. Hello. What's good, guys? Better? You guys can hear me. Can y'all hear me better now? I have the volume all the way up. Let me check my mic. Mic is good. Desktop is good. Yeah, everything's at 100%. Volume. Yo. A little bit. Hello. What's good, guys? Yeah, the struggles of better trying to stream. Me better now. I have the volume all the way up. Let me check my mic. Yo. Nicer mic or something. Yeah, everything's at 100%. But anyway, volume. Today is Sunday, April 12th. Yeah, the struggles of better trying to stream. Better. I have the volume all the way up. Let me check my mic. Yo. Nicer mic or something. Yeah, everything's at 100%. But anyway, volume. Today is Sunday, April 12th. All right, so today's Sunday, April 12th. Yeah, the struggles of crazy week. Better trying to stream. I have the nicer mic or something. Yeah, everything's at 100%. But anyway, in the market. Today is Sunday, all his friends, April 12th. All right, so today's Sunday, April 12th. Yeah, the struggles crazy of week. Better trying to stream. I have the nicer mic or something. Yeah, everything's at 100%. I got everything muted. Okay. Yeah. All right. So, is it better now, Cosmic? Let's see. All right, cool. All right, so first we want to start off with welcoming everybody. I appreciate y'all coming on this live. So we want to start with the calendar because that's our roadmap for the week. As you can see, we only have one news this week, one red folder news this week. That means Trump gonna be tweeting like crazy if this market's gonna move, which is PPI, and actually that's a different time too. That's normally PPI is at 8:30. For some reason this week it's gonna be at 7:30, so that's unusual. Yeah, so we don't have no news Monday. So Monday is like a no trading day. Tuesday, yeah, we could trade that. Unless anything comes up during the week. Tweet wise, sometimes they like to add stuff during the week or the last minute or the day before. Yeah, Monday's no trading day. Tuesday probably a good, decent trading day. Wednesday, Thursday we could get a good move. That's hit or miss. And Friday obviously is probably like the weekly wick. All right, and so we're on our continuous contract right here. Let me go on. Let's take a look at the 12-month. So this is the previous year high. You can see up here. Came down from the wick, and we hit this 3-month gap here. That was the first quarter. That was the bias for the first quarter. I think we still might drop a little bit lower personally. We came into this is a monthly gap here. We'll just have to see. Came in here, mitigated that. Yeah, I don't know. We'll see going into June. That'll be the second quarter of the year, and we'll see what happens then. For the weekly time frame, like we were bullish last week, but it looks like we closed above this weekly volume imbalance right here. So I think we still want to push up a little bit higher, maybe hit this previous week high here, and this new week high from last week right here. Let's label that. And let me go ahead and label the 50% range of last week's range. I'll make that blue. And previous week's low. Now I don't know what's going to happen. I know like the peace talks ended, I guess yesterday, and it didn't go well. So I don't know if we're going to gap up or gap down. That'll depend. But we did close above this, so we're reading the charts. So I'd like to see us retrace to go higher, or even consolidate inside here. That'd be cool. Let's see. Inside of here, we have this daily gap. So this could potentially be liquidity sweep during the week in here, and it's a daily gap. So if we could come in here, hit this, and then push up, that'd be pretty good. Looks like we still have this 3-hour gap here. We're disrespecting this daily breaker, right? We close here. Did we close above it? Yeah, we're disrespecting this daily breaker here. So yeah, these are like targets for now, unless anything else changes. Let's see. I wanted to answer some questions. I think Daniel had a question about gaps. So I don't really use these gaps that much, but because there's a lot of them, but you know, like if we're in no man's land and you don't know where market's gonna go, you can potentially use these gaps to trade to or from. And these gaps are called weekly gaps, and it's the gap from where the market closes on Friday, and when it opens on Sunday at 1800. We also have daily gaps from when the market closes at 5 p.m. every day to the reopen at 6 p.m. every day. And the market likes to use them throughout the week. So I wanted to see if I can go through and show you guys. Let me go to the 4 hour. We have, let's see, where is last week's gap? Friday is there, and we don't always have gaps, but sometimes we do. Let's see, we have this one. Okay, so this is Tuesday. No. Where's Friday? All right, this is Friday. I don't see anything. Let's go to the 1 hour. Let's just, okay, let's see here. Okay, so we opened here Friday. Do we have any gaps here? No. I don't see any gaps at all. Okay, here's one. Like for instance, this on this day right here, Friday, March 20th, market closed here, right? And then on Sunday, which is here, at 6 p.m., the market opened here. So let me do a box instead. So from here, settlement price, and to the new open, we have these gaps. And the market likes to fill in, if it's a smaller gap, it'll eventually fill in most of it. If it's a bigger gap, sometimes it'll fill in up to like 50% of it. And we could always use those for trades, trade opportunities. So, and then throughout the week, you can see, like here, we opened, trade up here, and then traded away from it, right? And this is basically the 50%. And then we ended up closing above it, and you can see we came back to it here, bounce off, bounce like throughout the whole week, bounce, go close below it, disrespect 50%, close below it, and then trade away from it, and so on and so forth. Let's see if I can find another gap. Tuesday, 4, we close here. Like on Tuesday, we close right here, and then at 6 p.m. we opened here. So you can see it like right there. And then if you go to the lower time frames, you will see, let's go 5 minutes. Yeah, you will see. All right, we're at 6. Okay, we opened up, we closed up here, and then 1800 right here. Right here and here. You can see it right here. And then you're going to see how we use these opening gaps throughout the day. we close above it, come back, touch it, reject, close below it, come back to it, and we just dance around it. And you can see, look, throughout the day, bounce off of it. So when I don't use them that much, like I said, because there's a lot. There are indicators that'll help you with them. And then you have these gaps for both weekly. This is just one example of weekly and one daily. But you can see just throughout the week, it keeps hitting. And then it comes to the weekly opening gaps. It hits, rejects, disrespects, go below it, rejects off of it, rejects off of it. So some people can take trades off of that. There is an indicator, I think. Let's see. I think I have one. Let me look into my favorites. Fundamental. New week opening gap. All right, let's see if I can just find one. New week. Yeah, so NWOG. New day. Let's try this one. Let's see. Yeah, so this will, let me delete this. It will automatically plot them for you. And you can see here, let me see. I'll open a few of them. So you can see in blue, let's see, how do they have them? Here they have the borders are blue for the new week opening gaps, and the new day, it looks like they're red. So let's see if I can find the new day. So you can see the weekly gaps here, right here. This is one. I don't know if you guys can see them very well. Let me do it. Let's see if I can find the daily. Okay. Yeah. Let's see if I can hide. Let me hide my drawings. Okay, so I hide all my drawings. So now you can see the blue are the new week opening gaps, and this person has the dates here, and then you have the new day opening gaps here, and you can see how the market trades to them, from them. And when usually if you're in no man's land, you see a pile of them, the market likes to trade to them. So eventually you'll see this group here. When market structure shifts, it could be an opportunity to trade to all of them. Now it'll come to it, but it doesn't mean if the market is really bullish, it could take a little bit. It doesn't always have to come back to these gaps immediately. But if you're in one, you can use, and you're in within macro times, you can use these gaps to take trades to or from them. The other gap here, let me turn this off. Does that kind of make sense? I don't really use them that much, but hook me up with a thumbs up. The other gap that I hold on, let's see. Peace talks went to shits, if I remember correctly. Yeah, it did. So like because of it, they probably can manipulate the market, especially if we like gap down today when the market opens at 6 p.m. We could be in for like lower prices, so even lower than like last week. So we'll see. We'll just have to wait and see where market opens. The other thing I wanted to talk about, I think I don't remember who asked this question, and it's about the gaps, like the regular trading hours versus electronic trading hours. So futures market is like 23 hours, 6 days a week. But like institutions are not allowed to trade overnight. So there's really not that much volume. So they're allowed to trade from like 9:30 to like 4:35 o'clock. And so there's a period from where the market closes every day to where it opens, and it's invisible unless you hit the electronic. It's on your lower right of your trading view chart. I'm gonna hit it right now. Here, let me go to a smaller time frame. So right now we're looking at electronic trading. So we've been trading all night, all day, right? And then if I hit the regular trading hours, this is what you see. Gaps. This I do use. So the market, for instance, on Thursday, the market closed here, right? And then on Friday, at 9:30, it opened here. So what I like to do is draw the gap between them. And I know the market will come mitigate at least 50% when it's, especially early, when it's trying to establish the range. And as you can see here, the market hit here, it opened here, went up, and then these are 15. Let me go to 1 minute time frame. Yeah. So the market, this is the opening of the market. It came down, hit 50% of the gap, went back up. Obviously, I think it went. This is the CPI highs, and then came back and filled the whole gap. It loves to fill them. Let's see if I can find another one. This was Thursday, Wednesday. Oh, these are huge gaps here. There we go. Okay, so the market closed here on Monday, opened up here, and let's see, it closed right here and opened here. So when the market goes away from it, it loves to return, man. So it went down, it opened, we're bearish early, went down, hit a higher time frame, PDRA, whatever it was, and then you can see it made its way. Look at the respect right initially to 50% of the range. I take those trades all the time, and then rejected away from it again. Ran back to another 50%, eventually closed up and went and got these highs. And they're there all the time, and the only way you can see them is the toggle. You have another one here. Look at this. Opened, touched it, expanded away from it, and eventually came back almost and pretty much filled it. Another one here from Wednesday, April 1st, closed here, opened here. Market opened at 9:30, went down, hit a higher time frame PD array, and then bam, right to 50%, closed above 50%. Usually if it closes above 50%, then we'll go and push to fill it up. But yeah, you guys can go check on your charts. And here, let's see if I can put it in frame so that you can see where I do it. I have, okay, so right here, this one is RTH, and that stands for regular trading hour. If you hit the toggle, you have the option for electronic trading hours. Is it in frame? I have these big screens, guys, sorry. Oh. Right there. Yeah, so right here, hit electronic trading hours, you get all the overnight price action. Hit regular trading hour, you get all these gaps, and it looks like the New York Stock Exchange kind of. So that's that. I think I had another. Let's go to electronic trading hour. I think about ranges. Another question about ranges. Let's go to the 1 hour time frame. Okay, no, actually, let me go to the daily time frame first. So the other thing that's important about, first, before I move on, do we have any questions? You guys have any questions? All right. Oh, I see a lot. Okay, so hanging out. Let's see. Is it bearish now? Well, now, what happened with the peace talks? It sounds like it could make it bearish, but I won't know until the market opens. Especially like the time frames that we trade, we're just reacting to price. If this, then that type, and then look for high time frame PD arrays to take our trades to. So, I mean, I'm still like overall in the market, I'm bearish. We are getting a new Fed chair in May, I believe. So the printing machine could start printing like crazy, because that's what Trump wants. So it could, then, well, May, June, maybe July, start pushing the market higher, maybe to even all-time highs. But for right now, I lean more bearish than not. All right. So about ranges, the market likes to refer to like highs and lows and imbalances it refers to 20 days back, 40 days back, and 60 days back. So what I like to do is count. You literally just count candles. So we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So from this day to current day, it's good to look for the highs and lows. So that high would be here, and then the low would be here. So you draw
your GAN box, and then I like to find the 50% right here, which is here, and then I'll do 20-day candle range, right? And I believe that was here. And then you do it for 40 days back, and you do it for 60 days back. So right now we're in a premium of the 20-day market. So the market could take these highs and then come back to rebalance again. So from this high right here, when we drop down low, which is point A to point B, and I like to call the 50% area point C. We like to see if the market want to continue lower, or if the market want to start disrespecting PD arrays, bearish PD arrays to go higher. And we don't know that, but I know the market always likes to go to at least 50% to rebalance. And you can do this on, right now I'm doing it on a daily time frame. I like to keep it there, but you can also do it on the 4 hours. You can do it on 1 hour, and so on and so forth, 15 minutes. But I do like to do the daily just so I can know on a daily time frame where I'm at. And say here for instance, let's do this. When we hit this low here, this monthly low here, I don't know if we're going to continue going down or if we're going to reverse. I know we have a high chance of going to at least 50%. So you drop your to your 1 hour time frame, and then you look for PD arrays within that time frame on the 1 hour, because the 1 hour correlates with the daily time frame, to see if we can come up to 50%. Now we'll always come up to 50% unless we're like really bearish. So down here, I'll be looking for gaps. We did a liquidity sweep. I'll look for a breaker. Happen to see a breaker here, and we have this bearish gap here. I'm sorry. This is a bearish gap here. We disrespected here. Another bearish gap here. We disrespected here. Now we have a breaker here. We disrespected that here. Coming down on this candle. Obviously, it has to be within your macro frame, time frame. You could potentially take this long from this breaker. Did we close above it? Oh, actually, we didn't close above it. So I wouldn't really use this one because we didn't close above it. But I could have used this 1 hour inversion gap right here. After we swept this liquidity, 50% of this monthly gap was respected. Swept liquidity. We have one gap. I don't know if you guys can see it. You have one gap, one tiny 1 hour gap right here. Closed above it. Opened right here. Dropped right inside. So you could have an entry here. Close above this second gap here. And you got multiple entries in here. And explosion. This would be called point C. And then now, once you're here, you have to watch and see what happens. Obviously, we came down. And you could take this range high right here. Came down almost to 50%. Respecting this 1 hour gap right here. Closed above it. We now have a breaker. Right there. Closed above the breaker, so it's valid. Back up, close above our 50% and original consolidation, as you can see. So whatever your time frame, you want to look at point A to point B, and then once you get to whatever higher time frame you're looking at, you're watching. You want to see disrespect. And preferably you want to see it within your macro time frame. And then you can take easy trades. I like to do these trades easy trades to 50%. Once you if you disrespect the 50%, I think this was a daily time frame. Yeah, we closed here above it, went back, rebalanced, and then on a daily time frame, you can see that went to rebalance a daily fair value gap and closed above it again. So you're looking for this 50% area. Every time we go above it on a higher time frame, we're taking longs. All right, and we'll be looking for that swing low, that swing high, which is this one here. So we also have, let's see, where's the 60-day one? The 40-day, 1, 2, 3, 4. I think 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 15, 16, 17, 18, 19, 20, 21, 22, 26, 27, 28, 29, 30, 31, 32. So this is 40 here. So we have this high to this low, and the range from this high to this low, the halfway is here. So this would be your 40-day range, and then I think your 60-day range would be up here somewhere. So 60-day range is right here. So as you can see, we have confluence. If we come back lower this week, and we don't take out this high and hit this imbalance early in the week, we could come back down on a daily time frame, hit this daily gap, also hit the 60-day 50% wicket, respect it on a daily time frame, and take longs up here. So that's how you can build confluences. And you guys have anything y'all want me to answer? Any questions? No. Captain Jack, are you buying more United Health? Let's take a look at Bitcoin real quick. All right, so we have Bitcoin. Here, let me remove. Let's remove all this. All right, in Bitcoin, we've hit 2 standard deviations. We still have this monthly gap here that I've been interested in to see if we could potential take it and drop lower. Sell side just below here. Yeah, I want to see if we respect this monthly gap. See if we could drop a little bit lower. If we disrespect it, I think we'll come and take these highs here. Yeah, and I think Captain Jack. Let me look at United Health. Is it UNH? I know that's your thing. No, let's go to stocks. Yeah, we hit below 2 standard deviations on a monthly time frame. Let's see if I can get a cleaner one on the weekly. Yeah. I don't see why we wouldn't come down to 189. What do we have here? Let's see, 3 months. Okay, there's a yearly gap here. Yeah, we have a yearly gap here. So, yeah. We're rejecting the 2 standard deviation. Let's see if we want to come and hit this 4 standard deviation before we start our new move up. And we have clearly some liquidity. Sell side right here. And then we could potentially make our way up. Yeah, up here. But so I think that's all I have for you guys. If you guys don't have any questions, yeah, till next weekend. And if you have any questions during the week, just hit me up, and then I'll try to answer them to my best abilities. So have a good week, guys. All right, and don't be a degenerate.